Hey guys, in this video we are going to discuss about the chapter 11 of Naked Forex, exiting the trade. There is a trick to a graceful exit. It begins with the vision to recognize when a job, a life stage, a relationship is over and to let go. It means leaving what is over without denying its value. Alan Goodman, and I am showing you this table 1.1 to know how to execute a trade in a proper manner. The important things is that you understand what makes sense to you and that you adopt and maintain the exit strategy in your trading. The first two exit strategies are for the zone exit and for the split exit. The second two strategies are formed for modifying split exits and three-bar exits. Few traders are interested in the quick profits. Traders want to get in and get out of a trade, and traders love the winning trades. The zone exit and the split exit are designed to take profit at the more important spots on the chart. The zones recall that the those spots on the chart where the market repeatedly reverses. There is another characteristics of the zone that is important for the naked trader. Zones are also magnets. The market tends to be attracted to these places on the chart. In other words, zones are stimulus. In other words, zone are the price barriers and the price magnets. Exit based on the zones take advantage to fact that zones attract price. Zone exit. The zone exit is the basic exit for the naked trader. The naked trader looks to initiate trades at the zone and the naked trader looks to exit trades at these same zones. The basic philosophy of the naked trader is this: the market tends to bounce off the zones repeatedly like a pinball. Therefore, it is perfectly responsible to look to these zones as potential profit target. Sometimes the market will get very near a zone and then trade away from the zone. For this reason, it is important that you place the profit target near the zone with sufficient cushion. For seller traders, the profit target should be several pips above the nearest zone, and for the buyer's trader, the profit target should be several pips below the nearest zone. The zone exit is powerful exit, and many traders find it easy to trade to apply this exit. The split exit will often enable a quick profit, so it is ideal for the traders who do not have patience to wait through a long trade. Split exit. The problem with the zone exit is that often the market will go much further than the first zone, and this lead to the frustration. Even traders like to trades that extend for a long time. The split exit is therefore a compromise that trader may use to allow for the market to trade go a bit further than the first zone, like the zone exit, but in the split exit may be used by those naked traders who are interested in hands-free trading. To use the split exit, the naked trader must divide the trading position into separated positions. One way to do this is to divide the trade into half. So for the instance, if a trade hit has a 6 lots and a split exit would mean using a one target for the three lots and the different target for the three lots. There is how a split exit is executed. The first zone is the nearest zone to the entry price and it used as a profit target for a half the position, and the next closest zone is used as a profit target for a remaining position. Once a market achieves the first profit target, the nearest zone, the stop loss, is moved to break even for the remaining position. The obvious reduce the risk for the remaining position. The position will either hit the second profit target or it will be stopped at break even. Plate exit will not allow make an additional profit. Some of these traders will end up with a smaller win simply because of the market will come back and close out the remaining position at break even. The split exit will require more patience than the zone exit. The fact remains that some traders will be stopped at break even when following rules of the split exit. However, obvious some traders will also make it to the second zone and therefore the average size of the winning trades will be increased. Many traders see things differently. Traders love bagging the big trades. Traders have increased confidence in their trading system. Traders in it for the long haul. Traders use to exit strategy to take advantage of the trending market. A tail exit strategy. A exit strategy that is dynamic with no fixed exit price. The exit price consistently adjusts with the movement in the market to maximize profit. All trailing exits are a compromise. There are two parts of to the trailing exit. The trailing exit must allow a cushion so the market may move against the position, and trailing exit must have a line in the sand to capture the profit once the market moves too far against a position. Both the ladder exit and the three bar exit to do the best during the trending market. The ladder exit use zone to identify the profit target, whether the three bar exit uses the entirely different approach. A ladder exit is similar to the previous exits is in that the zones are used to identify the profit target. The difference, however, is that each zone is a potential profit target. When using a ladder access, the naked trader never knows where the final exit price will be. This is because the market, the ladder exit allows the market some breathing room. There is a ladder exit works. Once a trader is initiated, the stop loss is moved in according to the how far the market is moved. So, for example, if the market moved from the entry price to the closest zone, then the stop loss is moved to the break even. Once the market moves further to the second closest zone to entry price, the stop loss is moved from the break even to the first zone, and so forth. The easiest way to see how the ladder exit is executed is to look at an example. Patience is needed to employ the ladder exit. Using the ladder exit allows the market a cushion of one zone. This may seem frustrating to allow the market to come back and to stop a trade for less profit, but this is a natural of the trailing exit. All the trailing exits include the three bar described further have to allow some breathing room or cushion in order to capture a large profit available in the trending market. Three bar exit. The three bar exit is a unique exit because unlike the previous exit, it is because it does not involve zones. The three bar exit get its name because the exit is based upon the price on the most recent 3-bar candlestick. Exit is simple trailing exit based on the lowest low of the previous three candles for the buyers, trader for the highest high of the previous three candles for sellers. The naked traders looks in the profit by trailing the stop loss behind the lowest low for the buy traders of the previous three candle. The 3-bar exit works best when the market accelerates into the strong trend as long as the three most recent candlesticks are following the trend. The 3-bar exit will be trail slightly behind the advancing candlesticks captured profit along the way. Exit is ideal for the traders who are interested in capturing the large profit. And the 3-bar candlestick may be frustrating. Some traders will end up as a loser, other traders will give back much profit, but if used consistently, this trailing exit will capture big moves. The key to this exit is to use it when the next big trend will pop up. But the trader who apply trailing exits such as the 3-bar exit are ready to capture the profit from the next trend in the market. Managing exit. A common problem for traders is to retrading the most recent trade. This is the issue is an extremely common for the traders struggling with an exit strategy. Traders will take a close look at the recent trades, see their improvements could have been made them decide to change the things for the next trade. The problem with the strategy is that the every trade is different and the previous trade has nothing to do with the next trade. Every trade is an independent event. When the trader fall into a trap for retrading the previous trade, bad things often happen. If you have found a adjustment your strategy is journal or changing your exit strategy in particularly based on what occurred in the previous trade. You are falling into this trap as well as perhaps you take a trade and the market runs for the several hundred pips in the expected direction and long after you have an exit the trade. This may encourage you to change to your exit strategy on the next trade. The problem with this next trade may be not run for the several hundred pips. Maybe go for the next zone, which means that you will reduce the profitability even further. Stick to one exit philosophy. Decide what makes sense to you. The market runs for 500 pips after your exit the trade. When you got stopped out after the market goes into the expected direction, initially it is important to stay true to your trading beliefs. The best way to do this is to avoid retrading the last trade. In fact, retrading the last trade may send you into a cycle of doom. Never a fun place for traders. In the next chapter, we will examine the cycle in the detail.